Hello everyone, welcome back to Stock Spy. So, Baidu is up more than 50% over the past 3 months. It's a remarkable run for one of China's leading tech names. But what's driving this surge? And more importantly, where does Baidu go from here? In today's video, we'll break down the drivers, the risks, and whether Baidu is a buy right now. So, what's driving the rally? Number one is the AI and cloud transformation. Baidu's push into artificial intelligence and cloud services is the key catalyst. In Q2 2025, over half of the mobile search results already included AI-generated content, which is up sharply from earlier in the year. Meanwhile, non-online marketing revenue, which include cloud and AI services, grew more than 30% year over year, crossing RMB 10 billion. This shows Baidu is moving beyond its dependence on advertising. And there is this chip development. Baidu is also developing its Kunlun AI chips, aiming to reduce reliance on foreign hardware and control more of its tech stack. And analysts like Jeffries have taken notice, raising their price target for Baidu to $157, citing AI and chip momentum. Now, the financial moves. To fund these expansions, Baidu completed a CNY 4.4 billion bond offering in September 2025. That liquidity strengthens its ability to invest more in AI and cloud, giving it more firepower than its rivals. Let's have a look at the risks. There is a clear advertising weakness. Baidu's core ad business is still significant, and this is under pressure. Revenue in its latest quarter fell about 2% year over year, driven by a 7% decline in online marketing. If China's economy slows further, advertising may pull back even more, hurting cash flow before AI revenues fully ramp up. There are valuation concerns. After a 50% rally, Baidu's valuation is no longer cheap. Some analysts suggest limited upside, with consensus price target of around $122 to $124, which actually implies even a modest downside from current levels. There is, more importantly, the regulation and geopolitical tensions. Being a Chinese tech company means exposure to regulatory changes, US-China tensions, and export restrictions on advanced AI chips. These risks are unpredictable and can shift investor sentiments very quickly. AI investments is expensive. If Baidu struggles to monetize its models or integrate AI deeply across its platform, growth could slow down and recent gain may not hold. So what could happen next? The bullish case is Baidu successfully monetizes AI, scales its cloud business, and achieves more chip independence. The stock could reach $143 to $157 over the next couple of years. The bearish case, if AI adoption lags, ad revenue declines faster than expected, valuation could retreat to $100 to $120 range. The middle ground, where Baidu grows steadily and AI cloud offer some ad weaknesses and the stock consolidate near the current levels. So what's the recommendation, or what should investors do? If you are a growth-oriented investor, Baidu is still attractive as a long-term play on China's AI and cloud market. The upside from successful execution is significant. If you are more cautious, then the recent rally leaves less margin for safety. Near-term risk from weaker ads to geopolitical tension make it risky to chase at these levels. So my recommendation maybe is to hold with partial trimming. If you own Baidu, consider taking some profits, maybe 20 to 30% of your position, while keeping a core stake to capture long-term AI upside. If the stock pulls back towards 120 and the fundamentals remain solid, that could be a better entry point to add shares. In short, Baidu has transformed from a search engine to an AI and cloud contender. The future looks promising, but with near-term risks and stretched valuation. Patience and discipline, positions sizings are the key. Thanks a lot for watching.